I cannot believe this year has ended, which means we're going to take a look at my portfolio in detail. I'm talking my dividends, my performance. I'm going to talk about every single company in my portfolio, so it's going to be a great video. Let's see how I did. I set a goal for myself in 2023, and I'm going to show you if I beat that or not. Again, on this channel, we focus on quality companies, and I abide by this quality checklist. I look for solid financials, a good management team, positive brand recognition, good products and services that have, sticky subscription or something like that, big ecosystem. I look for a moat, and then a good valuation, of course. You don't want to buy something with a high valuation and reduce your potential for growth. We are an investing family on this channel, and we help each other grow in knowledge and become wealthy. So let's dive right into it. I'm going to show you this chart first. This is a market value percentage of my portfolio, so it shows each sector and how much weight it has in my portfolio by market value. So we can see technology has heavy weight. Down there, the dark green, that's SCHD, so that's a big holding of mine. Real estate grew massively for me this year. I think that was a great opportunity, and I took advantage of it. And then we have industrials, which is Union Pacific. So yes, this shows me also I'm underweight in healthcare, energy. I have an international index that I'm going to talk about, but to me, it doesn't really matter if you're overweight, underweight. It's the quality of the investment that matters. So let's look at my dividends. We can see my dividends by sector. This is my yearly income, and we will see right now real estate is the big winner. It's what's bringing me in the most income. That dividend equity, of course, is SCHD. That's the second one. Then we have industrials, then technology, so on and so forth. So here it is. This is my dividends by year, what I've earned. And you'll see in year one, I earned $330, and now I'm over $1,500. So each year you see my dividends getting higher and higher. This is the snowball effect as you reinvest those dividends. In year one, I could have bought 3 pairs of nice shoes with my dividends. Now I could buy the most expensive iPhone or a small vacation with my dividends. This is the power of passive income. Eventually, I want it to pay for all my expenses and then some. On this little chart here, this is just another look to show you the growth year by year. That snowball effect, those mountains, those peaks are getting taller and wider, and it's just fantastic. So now let's look at the performance I had in 2022 compared to now in 2023. And what a massive change. First, here's 2022. You'll notice I have a lot of holdings compared to what you'll see in a minute for 2023. I also ended that year in the red at a negative 6% loss, unrealized loss that is. So really, this portfolio didn't do well. Most portfolios didn't. It was a hard year. 2022 beat up most everybody. Also, you'll see my yield on cost is a 2.76%. That was the average yield I was getting in my dividends. So now in 2023, you see a vastly different portfolio. I condensed, I sold some of my losers, I added to my winners. So you'll see some allocations have gone up massively. I am now 20.46% in the green. Those are gains. And my yield on cost went from that 2.76% to 3.18%. So my goal for 2023 was 12% growth, and we smashed that in 2023, and my portfolio had 26.45% growth. That's taking that negative 6% and adding this 20.46% growth of 2023. So to grow my portfolio in 1 year, 26.45% is massive. In fact, let's compare it to the S&P 500. I beat the S&P 500 by 2.22% in 2023. This shows me I am doing something right, and I am focusing on a good strategy that is producing strong results. Now again, right here, the S&P 500 went up 24.23%, and I went up 26.45%. So now I want to do a quick input on each company in my portfolio, and this is something that will probably give you an insight onto what I'm going to do this next year. So Microsoft. Right now, I do think it's overvalued, but I will add heavily if it goes below $300 per share. A near perfect stock that offers growth, stability, and very high quality traits that should make this a lifelong hold for me. Areas of growth are Azure Cloud, gaming, and the integration of AI into almost all their products. Areas of strength and stability are its office products, and that will keep it a staple with businesses. And Microsoft's subscription-based services are sticky and create a powerful ecosystem. So with a massive 58% gains for me, this is easily the stock that has made me the most money. Now, Amazon, one of my favorite stocks for growth. Amazon has massive offerings that are sticky, convenient, and innovative. I think this will be my best performing stock over the next 10 years. A leader in e-commerce and in cloud with AWS, which are the two fast-growing sectors in this economy that I am happy Amazon has dominance in. Amazon offers a very sticky subscription with Prime, or shall I say Amazon Prime, that includes value and convenience where consumers are likely to hold on to during any economic environment. I just did a video on Amazon if you want to see more, as it made one of my top 2024 stock picks. Up an impressive 48%, this one I plan to hold for at least the next decade. Now Cisco, one I struggle with holding as they fail to deliver often in growth. They're moving slowly towards a subscription-based model, which I'm hoping provides some healthy upside in the future. I got in early, so I'm up about 18%, but it is and will remain a small allocation of my portfolio. Don't be surprised if I sell out of this one someday. Now, Vici, one I talk about often. I love this REIT, so I will make this brief. It's an experiential REIT with extremely unique, high-quality properties paying a near 5% dividend currently. It's one that I feel will outperform its sector, and I recently added heavily. It's almost an 11% allocation of my portfolio and is providing over 7% of gains. I'm very bullish on this REIT, and if you watch my videos, they just announced international expansion, a very exciting investment in my portfolio. That leads me to Realty Income. This is just a very solid, boring REIT that pays an over 5% dividend currently, hold many recession-resistant properties, has a strong track record, and adds stability against any volatility Vici may have, one I plan on holding for a long time. Now, SCHD, the ultimate diversified way to collect growing dividends with some decent appreciation in your invested dollars. A safe way to make passive, dependable income and not worry, as this low-cost ETF is passively managed, holding companies with fundamental strength compared to their peers based on financial ratios. A planned forever hold for me, and currently the holding that pays me the most in dividends due to my large, over 16% allocation of my portfolio. I'm striving for 1,000 shares and will do an update video soon on where I stand. Currently at 10% gains, I am very happy making this one of the largest allocations in my portfolio. Johnson & Johnson. I am 50-50 on Johnson & Johnson. I think with their recent spin-off of their consumer healthcare unit and a renewed focus on their pharmaceuticals and medical devices units should drive higher revenue and growth overall. The area I struggle with is that Johnson & Johnson has been a poor performer for me over the years I have held it. Risks with lawsuits is high, so I'm debating selling this company. Let me know if you think I should or shouldn't and why. I would love to hear your opinion. Now, S&P Global, a company I like more and more as it is a data producing powerhouse, and data is so important and sought after these days. Data is the future and will only become more and more valuable. Of course, with its rating services, risks are constantly emerging, and why I think entities will become more and more reliant on the credit ratings and ratings on various investment instruments that SPGI provides. A strong company with what I believe will produce a strong future of revenue growth, and that equates to strong returns for investors. It's a large 14.5 allocation of my portfolio, and as a newer holding, it has already generated about 23% gains for me, one I am bullish on and plan on holding for at least the next 5 to 10 years. Now, AT&T, I will sell this stock at some point, but with management focusing on lowering debt, this is a huge driver of AT&T's stock performance. So I am waiting patiently, as I do think management will make this a priority, and the more they pay down their massive long-term debt, the higher their stock price will rise. We will see if the next couple earnings show positive pay down of that debt, and maybe 2024 is when I sell this lethargic performer. Warner Bros. Discovery, a stock I acquired from the spinoff of AT&T. It's a very small 0.68% allocation of my portfolio, so the huge 38% loss is minimal in dollar value. I'm actually bullish on Warner Bros. Discovery, as I believe it can become profitable like Netflix with its quality offerings and viewed as the higher quality content streaming company. I don't think it is as resilient as Netflix due to its higher price tiers and lower quantity of content, but I do think it will be towards the top of the market share between the other streaming companies. This will not be a long-term hold for me, but I think I can sell someday in the green. Below $10 per share is where I will buy some more to lower my average. Now, BXUS. This is my international ETF. I mainly hold this for diversification reasons, but I also hold individual companies that do business worldwide, so I'm analyzing currently selling this one possibly, but I'm not sure yet. It's up 20% over the last 10 years, which is pathetic, and I believe that is due to the massive 8,542 companies that make up this fund. That is a lot and really waters down any opportunity for strong performance. It's a smaller 2.44% allocation of my portfolio, so I will notify you all if I decide to sell. I just don't see many benefits to holding this one. Next up is Fenny. I am bullish on energy, but don't want to risk my money in just one energy company, so I do it through this ETF. We are very reliant on oil and gas still, and current companies like ExxonMobil are investing in renewable energy. So I think this fund will do well, and I plan on holding long term. It's a very small 0.67% allocation of my portfolio, so any large pullbacks and I will add heavily to this fund. Now 3M, the least favorite stock in my portfolio. I do not think this company is well managed. It has a lot of risks through litigation. It does not offer strong recurring revenue sources, and there are many other things I dislike about this company. I bought 3M when I first started investing and did not do research on it. I just simply let someone else tell me to buy it due to its dividend. Talk about a dividend trap. I don't think I will make it in the green with this one, so I will probably sell in the red and hopefully soon. Lastly, Union Pacific. I consider this my sturdiest stock as there are high barriers to entry in this industry. Trains offer the best and most efficient ways to transport large quantities and sizes of goods. It's a newer holding and is already a large 10% allocation of my portfolio, but has done great for me with 25% in gains. This will be a long-term hold, and I will add heavily with any large dips. Now, you have just seen my actual portfolio and its performance. Not many content creators will do that. I do this as I feel this is the best way I can help others and myself is to be honest and transparent. I show my portfolio performance with every single video as well as all my buys and sells. If you value this type of content, I would really appreciate your consideration in subscribing and joining our investing family. It would mean so much to me and the time I commit to this channel. I also want to say a very special thank you to all my subscribers and supporters. You truly motivate me to keep me pumping out content and striving to provide you the best content possible. So the appreciation and gratitude is massive. Now, please feel free to share how your portfolio did in 2023 and what goals do you have for 2024. My main goal is to continue restructuring my portfolio to enhance my potential for growth. I have already made some big moves this year and plan on doing some more in 2024, so you will want to follow along for that. Last year, I set a goal of 12% gains, and in 2023, I smashed that. So I have to be reasonable, and I feel that the 26.45% growth I had in 2023 probably won't be replicated in 2024, so I'm going to aim for a 15% growth goal next year. This will be a challenge, but I am up for it. Well, thank you for joining me today. Happy New Year's. Keep investing, saving, and learning, and let's make 2024 our best year of financial growth yet. See you very soon. Have a great day.